Good evening. Ira Epstein, and here we are. I'm just after 7:20 p.m. Central Time with your SPDR ETF wrap-up for this Thursday, July 21st, 2022. Nice to be back in my studio. And I think you see I didn't miss too many days of doing anything. Had a wonderful time in Montana. Love the people there, love the country. If you've never been there, go. It is gorgeous. But we're dealing now with an interesting time in the markets. We wanted to get through the European Central Bank, Bank of Japan. They did their thing. Bank of Japan did nothing, but a big surprise by the European Central Bank. Instead of a quarter-point hike, they went 50, and they made their decision at the last minute, just like our Federal Reserve, something else. They're leaving the ex ante. What does that really mean? They're going data dependent. They're not going to go with guidance. Data dependent. So each meeting that they have is a live meeting. They'll study the data. What do we do? How do we do it to get and beat this inflation program? That is a radical change for them. Mario Draghi resigned. Can't keep his government together, but nothing's new about that. No governments in Italy last very long. They seem to just come and go. There's too many ruling coalition parties. You can't hold it together. Sort of like Israel. Very difficult to do anything there. But now we have to get ourselves ready for the remainder of the earnings season, which is going on strong. I don't know if you saw Snap tonight, down 26%. Now we get Meta, Google. We get all the big boys reporting. What are they going to do? They have big advertising. They're not Snap. Snap just can't get it going with it, so it's a problem. But we've seen Pinterest. There's a bunch of areas that are showing problems. So there's nothing straight here. Second thing, what's the Fed going to do? Are they going to go 75 or 100 basis points? The impact of what they're doing is already being seen. Are you watching claims? Jobless claims have been climbing. You're looking at mortgages, back to 5.4. Looking at housing starts, there are none. Did you look at the Philly Fed numbers today? In the toilet. So the economy is weakening. It is not strengthening. And I know there are many people already saying, you know something? We probably have seen the worst of the scenario and it's over. Frankly, I don't know. Do I think that's correct? No. If I'm going to be wrong, I'm going to err in saying no. That is not how this ends. This ends much worse. This ends with, first of all, getting away from a 3.6 unemployment, riling back towards 3.9, 4, whatever the number is. It ends when you get through the summer and you start seeing that the people that have got these summer jobs, where they're going to go to work. Because the job offerings that were out there are being pulled back. Companies are having great trouble passing on inflation. And as they have that, they got to say, well, I need some workers here, but do I really? I got to pay this guy $20 some odd an hour with benefits and all, $30. Maybe I just don't do that. That's what you run into. I ran into it in Montana. I went to a restaurant. I swear to you, I waited 15 minutes. I got aggravated, and I took everybody out. I said, we're not staying. And they come up, why are you leaving? I go, 15 minutes. No, we don't have a server. You didn't do anything. I'm watching your servers clean tables in the room next to me, do everything but come up to our table. It's a help, it's training, it's all that. We went somewhere else. I mean, it's that simple. And it was my call, and everybody was mad at me. They thought I was being rude. I'm there to spend money. If I can't spend it, I'm not staying. No, it was run wrong. Okay, so let's go to JP Morgan, only because I don't have time to yet make the changes I want away from this. That's all. I'll get that done over the weekend or so. You're at an interesting point. You've been playing here. You can visually see it on the chart for a long time. The swing line is pointing up, which means until the market gets back under today's low. Do you hear what I just said? Because you have an outside day up. The trend is up, but you get under that, you got a problem. And lo and behold, that day's low is right against the 18-day average of closes. So if the market doesn't get through it, you might get a rally. Now, if you look at the bank indexes, you see they're rallying too. Why? Did the market suddenly have a better change of heart that higher interest rates are going to help? I don't know. I'm still concerned about all the reserves being put away for bad debts, and they're going to get bad. I was concerned today that AT&T is showing so many people aren't paying their phone bill. People pay phone bills. And when you don't pay electric and phone bills, it's telling me the economy's weakening. Let's take a look at that. In any case, I'm looking at the market fighting its battle here. I can argue it can get to the upper Bollinger Band, 117.30. I see the sideways action, and it's been there since before I went on vacation. Momentum-wise, I hate this. This market, if it gets to that Bollinger Band, is going to get dumped like that by the pros, in my opinion, because the combination of not being embedded, hitting a Bollinger Band, wherever that top number comes in, it should drop a little tomorrow. I think that's where the pros dump if it gets there. AMC. Told you, this market, while it's climbing this Bollinger Band, and I expected this, and I think you know that back here, I was telling you you can't be short anymore. Why? I owned a movie theater. All the money is made in the summer other than Christmas time. And if you don't make it now, you don't make it. And you're climbing and you've done your job. You've added to it. You've taken the market, if you really think about it, from the $10 range. You've gone up 70%. I know it doesn't look like that to you. To me, I knew. I was saying to you, and I said it here, go to my videos. I said, you don't want to really start playing this thing on the short side in the summertime. That's where you get the money, and that's what they're doing. Apple. So in Apple, we're at a key resistance point now. You finally got up to the combination of the 100-day average, the upper Bollinger Band, and the upper, the 200-day average. You are embedded. That's strong. Until the red line right here closes under 79, the trade will buy on dips as long as you don't first make a higher high. Oh, what did I say there? Got to take the enhanced Bollinger Band course to learn that. We'll talk about that in a minute. Disney finally came alive. Remember, we had been talking on this, and I said, I don't get it. Why is Disney unable to make a move here in this market and not be able to break through that top Bollinger Band? It has. So revenues must be picking up. You know, I can't imagine any kids that don't want to go with their family to Disneyland. It just doesn't make sense. And they have new rides. Did you read that? They're bringing back old, putting in new various things, but it's time for renovation, and they're doing their job there. Plus, they got some good movies, right? That doesn't hurt, and that helps the bottom line. We then get to the financial section. Remember what we just said. All the financials, JP Morgan and Life, the banks came alive a bit here. Will it last is the big question. They definitely have come alive. The industrial sector went from the lower Bollinger Band to the upper. I don't think you're going to break out and keep running. I'm looking at the Philly Fed. Why is this market up this much? Did you see those numbers today? They're a disaster, nothing short of a disaster. You're overbought, you're in a resistance zone, you own it. I don't want to own it. Semiconductors, this I want to own. I want to be Nancy Pelosi's friend. Her husband bought $5 million worth of stock just before they're voting on the chip bill. Come on, there's no inside information. We're going to go after the Fed for trading their accounts, but we're not going after anybody in Congress. And I know what you're going to tell me, and you are right. Nancy does not talk any of this over with her husband. He just woke up one day recently, and a week ago, federal record, and decided to buy $5 million worth of this. I get it. Okay. She didn't say a word. When you look at XHB to that, take a look. That's your resistance point as I see it in the home builders. I think a time to be bye-bye there. You're overbought in the energy sector, but you're drifting. You know, I was trying to figure out if is energy going to come alive now. I don't think so. If I'm Putin, and I'm not, I'm going to give you some of that gas. I'm going to give you some of everything because I want those turbines. I want things to keep my war going in my money machine. But here's where I'm going to get you. Winter's coming. You don't have the supplies, and you're not going to have the supplies that you need for the winter, especially if we get a rough winter. I'm going to get you that. I understand. I think you're just going to base build, maybe for a good part of this summer. Wouldn't surprise me at all. GLD, you still have an embedded reading. So if you lose that with the red line closing over 21, I'm going to look for 163.13. Frankly, this market's been a bit disappointing. If it doesn't quickly get under 158.03 and make this run to the lower Bollinger Band at 155.06, it's very dangerous to be short anymore. It's not picking up on the bearish momentum in the market. You would think, hey, the Fed's going to do their 7,500 basis points. Maybe it's all built in. The gold miners, you're flirting right now with losing that embedded reading. You got a 1941 reading. Any reading over 21 teaches me, and that's what at least I teach to you and other people, you're probably going back to the 18-day average and dangerous to be short. Copper, you lost the embedded reading here while I was gone. I brought it up in these. I still think you're going to the 18-day average of closes. Why not? Copper's big problem is China, as you know, and China's problem is people that buy homes there or condos. The way it works, you buy and you start paying a mortgage on it right away when you buy. It isn't delivered to you. Maybe construction hasn't even begun. The moment you buy, you lock in, you're paying money. Problem is, home values are collapsing, interest rates are going up, and you know what people for the first time did? In mass. I don't want to pay. Not going to pay you. What are you going to do to me? In mass. Created a big problem. So China's working on that. I'm still coughing a bit, as you can see. Joe Biden's going to have this cough. And whenever I hear he's got a raspy cough, they're going to have what I caught from this COVID. It's way better. Higher lows, higher highs. Look for resistance, upper Bollinger Band. Don't look for it to break out to the upside. At least that's my opinion. UUP. I see the argument now with the dollar index, but why do you want to do anything there, big or in the FX, when you got this central bank, the Fed, giving us a decision next week? Time to put your hands in your pocket. But it isn't time to stop learning. And if you're looking at me talk Bollinger Bands, the slow stochastic, why don't you learn it yourself? You don't need me to always point it. Why can't you do it yourself? I created a course of 13 videos. Each one maybe 10 minutes long at the maximum. You learn. I show you what I do. You do it. Then, as part of the course, I invite you to come into my morning subscriber videos. Another thing that most people pay for. It comes with the course for a limited time. And I enhance and I teach and I reinforce, be it a SPDR, an ETF, a stock, or a futures contract. I mention it over and over and show you why. You're going to get it. And guess what? At that point, you got an edge on everybody in your trading club because they don't get it. How do you see this? How do you learn? Watch this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.